Hello viewers, welcome to my channel. I'm Hasham. Already 12 problems I have completed on holding companies, consolidated balance sheet. Now in this video, I'm going to explain you the 13th problem. Hope you have already watched the earlier problems theory on holding companies and also the initial beginning short problems where I have explained you how to calculate the revenue profit, capital profit, goodwill or capital reserve, minority interest, intercompany transactions. All these things I have explained in the initial videos. So if you watch the videos, definitely you can get a good command on the topic of holding companies. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject Advanced Corporate Accounting and the topic holding companies. Watch the first introduction video, then starting 1, 2, 3 videos are very important. If you have joined now, you cannot be able to fully understand. So you have to keep a rhythm. You have to watch first, second, third video like that in order to get a complete command. So apart from this advanced corporate accounting, I have uploaded the videos for so many other subjects like financial accounting, advanced accounting, cost accounting, managerial accounting, corporate accounting, income tax, business statistics, financial management, investment management. So many videos I have uploaded. Select the video, select the topic, watch the complete video. Definitely you can be able to enhance your knowledge. You can get a lot of confidence on the subject. And if you like my videos, then share it in your group, in your friend circle. Subscribe my channel. Continuously I'm uploading the videos on your subjects. Now, before starting the 13th problem, I expect my viewers to have a printout of the problems. I have given the problems in the link under my description, so keep the printout of the problems ready before watching the video. Now, 13th problem. The following are the balance sheets of H Limited and S Limited as at 31st March 2006. Equity shares of rupees 10 each fully paid, 6 lakh rupees H Limited, 2 lakh rupees S Limited. So S Limited is a subsidiary company, H Limited is the holding company. So subsidiary company share capital 2 lakh rupees, face value of each share is 10 rupees. It means 20,000 shares. S Limited is having 20,000 shares of rupees 10 each. Now general reserve are given 3,40,000 H Limited, 80,000 S Limited. Profit and loss account is given 1 lakh H Limited, 60,000 S Limited. Now general reserve and P&L account of H Limited will come as it is in the consolidated balance sheet. Only regarding P&L account and reserves of S Limited, we have to make the working notes calculations regarding capital profit, revenue profit, all these things. Creditors, simply we have to add up the accounts payable of both the companies. Machinery, furniture, these are tangible fixed assets, will add up both in consolidated balance sheet. Now 80% of shares in S Limited. Holding company holds 80% of shares of subsidiary company. That means the 20% is the share of outsider minority interest. Then stock, debtors, bank for both the companies given. Now see the adjustments. The following information is provided to you. The profit and loss account in S Limited stood at 30,000 on 1st April 2005, beginning of the year. Beginning of the year, profit and loss account balance was 30,000. So this is completely pre-acquisition profit. It's a capital profit. We have the balance sheet is given on 31st March 2006. The year will begin from 1st April 2005 to 31st March 2006. The beginning of the year profit and loss account balance was 30,000. And end of the year, how much is the profit and loss account balance? You see the P&L account balance 60,000. So S Limited is having 60,000 P&L account balance end of the year. Beginning of the year it is 30,000. That means during the year profit earned is 30,000. 60,000 minus 30,000. 60,000 minus 30,000 is 30,000. So 30,000 is the profit earned during the current year. Whereas general reserve has remained unchanged since that. That means general reserve, whatever balance, 80,000 rupees balance is given general reserve. That is completely pre-acquisition reserve. It's a capital profit. Now, H Limited acquired 80% shares of S Limited on 1st October 2005 for rupees 3,40,000 as mentioned above. So in the balance sheet you can see Investments are 3,40,000. So when H Limited has purchased the shares on 1st October 2005, so how many months are pre-acquisition, how many months are post-acquisition? Now we'll see. October, November, December, January, February, March. These 6 months are post-acquisition. 6 months are post-acquisition. The first 6 months are pre-acquisition. So the current year profit of 30,000, current year profit, just now I told you 30,000 profit earned. That 30,000 we divide it into two parts, first 6 months, second 6 months. So 15,000 rupees profit is pre-acquisition profit, capital profit, and remaining 15,000 profit is post-acquisition profit, that's a revenue profit. Included in the debtors of S Limited is sum of rupees 10,000 due from H Limited. Debtors, again intercompany debt, included in the debtors of S Limited. S Limited के debtors में 10,000 rupees मिले हुए हैं, जो किसके पास से आने का है? H Limited. So this 10,000 rupees is intercompany debt. It should be deducted from debtors and also it should be deducted from creditors. Because in one company's books, the amount will be in debtors. In other company's books, the amount is in creditors. So this is intercompany debt, so it should be eliminated. Deduct 10,000 from debtors, deduct 10,000 from creditor. Already we have done this point in the last 2-3 problems. And for goods sold at a profit of 25% on cost price, that means the goods are sold by H Limited to S Limited, included in debtors of S Limited. That means the amount is payable to H Limited. So H Limited has earned a profit of 25% on cost price. Till 31st March 2006, half of the goods had remained, half of the goods had been sold, whereas the remaining goods were lying in the godown of H Limited on that date. Okay. So actually 10,000 worth of goods are sold by S Limited to H Limited. To H Limited. And H Limited have sold half of the goods. So 10,000 ka half, 5,000 worth of goods, H Limited has already sold it. So remaining in the godown is half, 5,000. So we have to find out what is the unrealized profit in stock of rupees 5,000. तो 5,000 रुपीस का गुड्स अभी बचा हुआ है H लिमिटेड में, अनसोल्ड है, तो वो 5,000 रुपीस में अनरियलाइज्ड प्रॉफिट वी हैव टू फाइंड आउट. तो हाउ मच अनरियलाइज्ड प्रॉफिट? द प्रॉफिट इज 25% ऑन कॉस्ट प्राइस. It is given on cost price. So we have to make an equation. Let the cost price be 100. Then profit will be 25. Selling price will be 125. We have to make an equation. अगर ये 25% on sale price अगर देता तो directly we would have calculated 25% on 5,000. If it is given on sale price, we would have directly calculated 25% on 5,000. But here it is given not on sale price, it is on cost. So we have to make a supposition. Let the cost be 100. Like that, we have to do it in working notes. Last sentence, you are required to prepare a consolidated balance sheet as on 31st March 2006. Now, see here. Consolidated balance sheet of H Limited and its subsidiary S Limited as on 31st March 2006. First, we'll make the blank balance sheet format as per Companies Act 2013. So, equity and liabilities, shareholders fund, share capital, reserves and surplus, number 1, number 2, minority interest 3, non-current liability, debentures are not there, just put a dash. Current liability, trade payable, creditors. Then fourth schedule, short-term loans and provisions. If it is there in the problem, we will take. Otherwise, just we put a dash. Then total. Then asset side, non-current assets, fixed assets, tangible 6, intangible 7, non-current investments dash. Then current assets, inventories, trade receivable, cash and cash equivalent, other current asset, total. So you should not take the amount. Simply you have to make a blank format of the balance sheet with note number. All these note amounts we will calculate in working notes and notes forming part of financial statements. First one, the share of H Limited is 80%. In the problem balance sheet it is given H Limited has purchased 80% of shares of S Limited. The remaining 20% shares held by outsider minority interest. Date of acquisition is 1st October 2005 and date of balance sheet is 31st March 2006. तो how many months pre-acquisition, how many months post-acquisition? तो current year का 6 months pre-acquisition and 6 months post-acquisition. That is the first working note, clear in mind. Now secondly, the profit and loss account balance on 31st March 2006, end of the year, given in the balance sheet. In the balance sheet you can see S Limited profit and loss account end of the year is 60,000. In adjustment it is saying beginning of the year 1/4/2005. The beginning of the year the P&L account balance was 30,000 given in the problem. The beginning of the year 30,000 we deduct. The remaining 30,000 profit earned during the current year. During the whole current year 12 months profit earned is 30,000. तो 30,000 पूरे साल का है. And the 30,000 6 months profit is pre-acquisition, 6 months profit is post-acquisition. Because period we have calculated. So 30,000 ka half, 15,000 profit pre-acquisition, that's a capital profit. And 15,000 profit post-acquisition, that's a revenue profit. Right? Now first of all, capital profit. All the reserves and profit appearing in S Limited before the date of acquisition. Before the date of acquisition are capital profit. General reserve. Reserve of S Limited given in the balance sheet 80,000. That's completely before acquisition only. P&L account balance on 1/4/2005. Beginning of the year profit and loss account balance was 30,000. And pre-acquisition profit of current year. Current year जो 12 months है, 12 months में acquisition से पहले के 6 महीने. Acquisition से पहले 6 months का profit 15,000. Here pre-acquisition profit 15,000. Take the total 1,25,000 is the total capital profit. Now out of this 1,25,000, 80% of capital profit belongs to H Limited and 20% capital profit belongs to outsider minority interest. So 80% of 1,25,000, 1 lakh, and 20% of 1,25,000, 25,000. So 25,000 rupees goes to minority interest, 1 lakh rupees goes to H Limited's share of capital profit. Now goodwill or capital reserve. First of all, investments of H Limited 3,40,000 given in the balance sheet. Investments made by H Limited in S Limited 3 lakh. From this we deduct two items. Paid up share capital and capital profit. Paid up share capital 80% of rupees 2 lakh. The share capital given in the balance sheet of S Limited is 2 lakh. So what 2 lakh rupees में से 80% 1,60,000 is the paid up capital. Share of capital profit, just now we have calculated 1 lakh rupees. Share of capital profit. Take the total 2,60,000. 340 minus 260, 80,000 rupees is the goodwill. That will be taken in intangible asset. Intangible asset 80,000 we are going to take. Next, minority interest. In minority interest we take 20% of paid up share capital, sharing capital profit, sharing revenue profit. So 20% of 2 lakh, 40,000. Sharing capital profit 25,000, here you have calculated. 25,000. Sharing revenue profit. Revenue profit means the profit earned after acquisition. Post-acquisition profit. Here you have calculated post-acquisition profit 15,000. In this 15,000, 20% belongs to minority interest. So 20% of 15,000, 3,000. Take the total 68,000 is the minority interest. This will be taken in liabilities, minority interest 68,000. Or last and final working note, that is unrealized profit in stock. So unrealized profit in stock 25% on cost price. It is given in the problem. S Limited charged 25% on cost price. So cost we don't have. So we are supposing let the cost be 100. The profit will be 25 because 25% on cost. If 100 rupees is the cost, 25 rupees is the profit. Selling price will become 125. Selling price will become 125. One equation we have framed. Now, our actual sale price is 5,000. Actually, 10,000 rupees worth of goods are sold by one company to another company. But out of 10,000, half of the goods are sold away. The remaining in stock is only half. So half of 10,000, 5,000. 5,000 rupees is the sale price. So how much is the profit in this 5,000? So 5,000 divided by 125 into 25, you will get 1,000. So unrealized profit in stock is 1,000. Now double effect. This 1,000 will be deducted from revenue profit, share of revenue profit from S Limited. Liability side में share of revenue profit में से 1,000 minus कर देंगे. And secondly, deduct 1,000 rupees from the stock inventory. From inventory we deduct 1,000. That is the effect. Over. Working notes completed. Now simply we have to take the notes forming part of financial statements. In financial statement balance sheet we have taken 1, 2, 3, 4, 5, 6 up to 10 notes. So all the note number we have to take, and each note we have to find out the amount. Share capital. Share capital will take only the share capital of holding company. Jaisa problem में दिया same to same. In the problem it is given 60,000 equity shares of 10 each 6 lakh. Same to same I have taken 6 lakh rupees. Here also 6 lakh. Second one, reserves and surplus. Now carefully you see. The reserves and P&L account of H Limited will come as it is, no change. The reserves of H Limited 3 lakh 40, P&L account of H Limited 1 lakh. Now, share in revenue profit from S Limited. Share of revenue profit from S Limited. The revenue profit, how much actually? Revenue profit means post-acquisition profit. Here you can see post-acquisition profit is 15,000. 15,000 rupees is the post-acquisition profit. This is the revenue profit. But all 15,000 does not belong to H Limited. Only 80% of 15,000 belongs to H Limited. So 80% of 15,000. 80% of 15,000 comes to 12,000. 12,000 is the share in revenue profit from S Limited. But from that we have to deduct the unrealized profit in stock. How much is the unrealized profit in stock? 1,000. So 12,000 minus 1,000, 11,000. Take the total. 4,51,000 is the reserves and surplus. Take it here. 4,51,000. Third, minority interest. Already we have calculated 68,000. Take it here, minority interest. Then trade payable, creditors. Take the creditors of both the company H Limited 70,000, S Limited 35,000 given in the balance sheet. Take the total 1,55,000. From this deduct intercompany debt. It is given in the problem that the debtors of S Limited include 10,000 rupees due to H Limited. Due to H Limited. This is the intercompany debt. Deduct from creditors. So 10,000 rupees deduct कर देंगे creditors में से. 95,000 is the accounts payable, trade payable. 95,000. Next comes tangible fixed assets. So we have completed all the items of liability side. So liability 12,14,000. Now come to asset side. Tangible fixed asset. Tangible fixed asset, machinery H Limited, S Limited, furniture H Limited, S Limited. Take the total. No adjustment, nothing. Whatever amounts are given in the balance sheet, same amounts I have taken. So 6,45,000 is a tangible fixed asset. Intangible fixed asset, goodwill. Already we have calculated goodwill 80,000. Intangible fixed asset, goodwill 80,000 I have taken. Goodwill 80,000. Then non-current assets are not there. Then inventories. Inventories I have taken here. H Limited. Inventories. H Limited 1,80,000, S Limited 1,20,000. Total 3 lakh rupees stock. Out of this stock, deduct unrealized profit in stock 1,000. So deduct 1,000 rupees. 2,99,000 is the inventory. Right. Next one is trade receivable, debtors. So take the debtors of H Limited, S Limited, add up both the debtors minus intercompany debt. That 10,000 rupees. So 10,000 rupees we have deducted from creditors. Same 10,000 rupees we have to deduct from debtors. 10,000. 70,000 rupees is trade receivable. Next, last and final item, cash and cash equivalent. The bank balance is given H Limited 70, S Limited 50, 1,20,000 is the bank balance. That's all. Balance sheet tally 12,14,000. That's all. So this is the end of problem number 13. Almost all the points are same except 1 or 2 points. Even those points are also not new in this problem. All these points we have covered up in the previous problems also. So we have completed problem number 13. Come on, now we'll start the next problem, that is problem number 14. The following are the balance sheets of Satya Limited and Siva Limited as on 31st December 2004. So here two companies are there, Satya and Siva. Balance sheets are given. Share capital, shares of rupees 10 each, 2 lakh rupees Satya and 50,000 rupees Siva. So how many shares are there in Siva Limited? 50,000 divided by 10. So 5,000 shares are there in the subsidiary company Siva. General reserve are given 50,000, 20,000. P&L account balance on 1st January 2004, beginning of the year. Because balance sheet date is 31st December 2004. The beginning of the year, 1st January 2004, P&L account balance is 30,000 Satya and 7,500 Shiva. Profit for the year 2004. Current year is 2004. So profit earned during the current year 2004, 50,000 Satya and 20,000 Siva. Creditors are given. Simply we have to add up. Fixed assets will add up. Then investment, shares in Siva Limited 60,000. That means 60,000 rupees is the investment made by Satya Limited in Siva Limited. Then debtors are given. Other current assets are given. That's it. Satya Limited purchased on 1st July 2004 4,000 shares in Siva Limited at rupees 15 each. 4,000 into 15 is 60,000. That's what given in the balance sheet. So Satya Limited is the holding company, Siva Limited is the subsidiary company. The holding company Satya Limited purchased 4,000 shares. The total number of shares in Siva Limited 50,000 divided by 10, 5,000. So in subsidiary company total number of shares are 5,000. Out of 5,000, 4,000 shares are held by Satya Limited. That means 4,000 remaining 1,000 shares are held by outsiders, minority interest. So when the shares are purchased, 1st July 2004. Our current year is 2004, ending 31st December 2004. So how many months are post acquisition and how many months pre acquisition? So 1st July, so July, August, September, October, November, December. These 6 months are post acquisition. So first 6 months are pre acquisition. So current year profit will be divided into 6 months profit pre-acquisition, 6 month profit post-acquisition. The pre-acquisition profit is a capital profit and post-acquisition profit is a revenue profit. How much is the profit in Siva Limited current year? 20,000. 2004 current year profit is 20,000. So out of 20,000, 10,000 profit is pre-acquisition and 10,000 profit post-acquisition. Then stock in Siva Limited includes 7,500 worth of goods purchased from Satya Limited. Then which company sells goods at 25% above cost? Here stock of Siva Limited. Subsidiary company Siva Limited, they are having a stock of 7,500 worth of goods. These 7,500 worth of goods are purchased from Satya Limited, holding company. So subsidiary company purchased goods from holding company and these 7,500 worth of goods are lying in the stock, closing stock. Now Satya Limited has earned a profit of 25% on cost. So in working notes we have to find out how much is the unrealized profit in stock. This 7,500 is the value of the stock. In this 7,500 how much is unrealized profit? That we have to calculate in working notes. Then creditors of Siva Limited include 5,000 due from Satya Limited. The creditors of Siva include rupees 5,000 due to Satya Limited. Intercompany transaction, intercompany debt. So here creditors of Siva Limited include 5,000 due to Satya. So in Satya's books, in debtors, Siva's name is there. In Siva's books, creditors, Satya's Limited is there. That means one company has sold the goods to another company on credit. On credit. So this 5,000 rupees will be deducted from debtors as well as creditors. What we have done in so many problems, we have done this. That's all. Prepare consolidated balance sheet as on 31st December 2004. Now see, consolidated balance sheet as of Satya Limited and its subsidiary limited Siva Limited as on 31st December 2004. First, you make the blank balance sheet. Equity and liability, shareholders fund, share capital 1, reserves and surplus 2, minority interest 3, non-current liabilities are not there, current liability trade payable 4, short-term loans provisions not there, total. Then assets, non-current assets, fixed assets, tangible, intangible, non-current investments, current assets, inventories, trade receivable, cash and cash equivalent, other current assets, total. The blank balance sheet we will make without taking any amounts, only note number we have to give. So all the amounts will calculate in working notes and notes. The working notes. First working note, share of Satya Limited. The total number of shares in Siva Limited is 5,000. Out of 5,000, 4,000 shares are held by Satya Limited. The share of Satya Limited, 4,000 by 5,000, 4 by 5. Share of outsiders. How many shares are held by outsiders? 1,000. So 1,000 by 5,000, 1 by 5. So 4 by 5 is the proportion of Satya Limited and 1 by 5 is the proportion of outsider minority interest. Now date of acquisition 1st July 2004 and date of balance sheet 31st December 2004. So how much is the period pre-acquisition and post-acquisition? Pre-acquisition period is 6 months. Post-acquisition period is 6 months. So current year mein 6 month pre hai, 6 month post. Then profit for the year 20,000. In the balance sheet it is given profit for the year 2004 in Siva Limited. Siva Limited profit is 20,000. So half of 20,000 pre, half of 20,000 post. So 10,000 pre acquisition profit and 10,000 post acquisition profit. The post acquisition profit is called revenue profit. The post acquisition profit of 10,000 is the revenue profit. So post acquisition profit, revenue profit 10,000. Share of Satya Limited. In this revenue profit, how much is the share of Satya Limited? 4 by 5. So 4 by 5 into 10,000, 8,000. Share of minority interest 1 by 5 into 10,000, 2,000. So 10,000 post acquisition profit, revenue profit, in that 8,000 belongs to Satya Limited, 2,000 belongs to minority interest. Now we calculate the capital profit. All the profits and reserves before the date of acquisition, that is called capital profit. So we take the reserves of Siva Limited, general reserve of Siva Limited 20,000, P&L account of Siva Limited on 1st January 2004 7,500 and pre-acquisition of current year profit. Pre-acquisition of current year profit, here it is 10,000. So take the total, 37,500 is the capital profit. In this 37,500, 4/5 belongs to Satya Limited. Here, share of capital profit of Satya Limited, 4 by 5 into 37,500, 30,000. And share of minority interest, 1 by 5 into 37,500, 7,500. Right? Now we'll calculate minority interest. So minority interest consists of paid up capital plus share in capital profit plus share in revenue profit. So how much capital is there of a minority interest? 1/5. 1/5 of total capital. Total capital 50,000 given. So 50,000, 1/5, 10,000. Share in capital profit, just now we have calculated. Share in capital profit is 7,500. And share in revenue profit, here we have calculated. Share in revenue profit is 2,000. So take the total, 19,500 is the minority interest that will come in balance sheet. Next, goodwill or capital reserve. Investment of Satya Limited 60,000 given in the balance sheet. Asset side, investment made by Satya Limited in Siva Limited. 60,000. From this we deduct two. Paid up share capital and capital profit. Paid up share capital 4/5. 4/5 of 50,000, 40,000. And share in capital profit, here we have calculated share of capital profit of Satya Limited 30,000. So 40 plus 30, 70. 60,000 minus 70,000, you are getting negative here. 60,000 minus 70,000, you will get minus 10,000. Minus means capital reserve. If positive value comes, goodwill. Negative value comes, capital reserve. Capital reserve 10,000. That's all. Now unrealized profit in stock. That means the stock of Siva Limited consists of 7,500 rupees. This stock was purchased from Satya Limited, and Satya Limited has earned a profit of 25% on cost price. That's what given in the problem. Now, when 25% is given on cost, we don't have cost. अगर ये 25% on sale price अगर दिया होता, तो we would have calculated 25% on 7,500. So 7,500 is the sale price, not cost price. We want cost. So we'll suppose, let the cost be 100. We'll make a supposition, let the cost be 100. Profit is 25%. So 100 ka 25%, 25 rupees. So cost 100, profit 25, sale price 125. We made an equation. If 100 rupees is the cost, 25 rupees profit, 125 rupees is the selling price. Our actual selling price given in the problem is 7,500. The value of the stock is 7,500. So in 7,500, how much is the profit? So 7,500 divided by 125 into 25, 1,500. So 1,500 is the profit, unrealized profit in stock. This 1,500 will have dual effect on the liability side as well as on asset side. On asset side, we deduct 1,500 from inventory, from current assets. Liability side, we deduct 1,500 from revenue reserve of Shiva Limited. Revenue reserve of Shiva Limited. That's it. Over. Working notes we have completed. Now we'll come to the main notes forming part of financial statements. First note, share capital. The share capital of Satya Limited holding company as it is, whatever is given in the problem. So 20,000 shares of 10 each, 2 lakh. It is given in the balance sheet. Same thing, no adjustment, nothing. So 2 lakh rupees share capital I have taken. Now second, reserves and surplus. So reserves and surplus we take first of all general reserve, P&L account balance and share in revenue profit from subsidiary company. First of all, we will take the general reserve of Satya. Satya Limited is the holding company. So holding company ka general reserve, P&L account fully will take. So general reserve of Satya Limited 50,000, P&L account of Satya Limited on 1st January 2004 30,000, profit for the year 2004 of Satya Limited 50,000. Then share of revenue profit from Shiva Limited. Share of revenue profit from Shiva Limited. Here we have calculated. Post acquisition profit is revenue profit and share of Satya Limited is 8,000. So Satya Limited is getting 8,000 rupees share of revenue profit of Shiva Limited. From that 8,000 we deduct unrealized profit of 1,500. From that 8,000 rupees deduct unrealized profit of 1,500. So we'll get 6,500. And capital reserve, just now we got capital reserve here 10,000. We got capital reserve 10,000. Take capital reserve 10,000. Take the total 1,46,500. That is the reserves and surplus. 1,46,500. Take it here. 1,46,500. Next one is minority interest. Already we have calculated minority interest 19,500. Here it is. 19,500 minority interest we have taken. Now trade payable. Trade payable. So trade payable will take the creditors. Creditors of Satya Limited 20,000, Shiva Limited 10,000. Total 30,000. From this 30,000 deduct the intercompany debt. The intercompany debt is given 5,000. 5,000. The debtors of Shiva Limited includes 5,000 rupees due from Satya Limited. Due from Satya Limited. Intercompany debt. So 5,000 rupees deducted. 25,000 rupees is the trade payable. There are no short-term loans and provisions. Total of the liabilities 3,91,000. Now come to asset side. Fixed tangible asset number 5. Number 5, tangible fixed asset. Satya Limited, Shiva Limited both add up together, no adjustment, nothing. 2,65,000. Take 2,65,000. Intangible asset, goodwill. But we don't have goodwill. We got capital reserve. We didn't get the goodwill. We got the capital reserve. So no goodwill at all. Non-current investment are not there. Inventories. Inventories are also not separately given. Inventories are not separately given. Then trade receivable. So you can see 6th, trade receivable debtors. We add up the debtors of Satya Limited, Shiva Limited, total debtors 60,000 minus intercompany debt 5,000. 5,000 rupees we have deducted from creditors, Same 5,000 rupees we have to deduct from debtors. So total is 55,000. We have taken 55,000 here. Now other cash and cash equivalent not given. Other current assets 71,000. So here other current assets. Other current assets, Satya Limited 60,000, Siva Limited 12,500. Total 72,500. 72,500. Less unrealized profit in stock 1,500. 1,500 rupees we have deducted here. Share of revenue profit 1,500 we have deducted. Same 1,500 we have to deduct from other current assets. If inventories were given, we would have deducted from inventories. But inventories are not given. So we will deduct from other current assets. So 71,000 is the total other current assets. Take the total, 3,91,000 is the total of the balance sheet. So this is the end of problem number 14. So far we have completed 14 problems on holding companies preparing the consolidated balance sheet. So if you are satisfied with my lecture, give a like to the video, give your comments on these lectures, share the channel in your groups, in your friend circle, so that more students can watch the videos and increase the knowledge, can get the confidence on the subject. And lastly, don't forget to subscribe my channel. We'll continue the next problem in the next video.